Welcome back to the Deep Dive.
Great to be here.
Today, we're jumping into a really interesting report. It's the Workload Automation Software Market, 2021 to 2033 Global Forecast from Cognitive Market Research.
Yeah, a lot of data in there.
Exactly. So our mission, as always, is to kind of pull out the key insights, the important stuff, so you get a quick handle on this whole sector. It's definitely evolving fast.
It really is.
Okay, let's unpack this. First thing that caught my eye, honestly, was just the overall trajectory. Seems like really steady, strong growth. But maybe before we get into the numbers, let's just clarify. When we say workload automation software, what are we actually talking about here? Is it just scheduling tasks?
That's a good place to start. And no, it's quite a bit more sophisticated than just basic scheduling. Think of these as platforms, really.
Okay.
They manage and automate really complex business processes, often tying together lots of different systems across a company's whole IT setup.
So like big data jobs, deploying applications.
It's exactly. Big data transfers, critical app deployments, complex batch processing, coordinating stuff in the cloud.
Yeah.
All that needs to run smoothly, automatically. It's about reliability, consistency, and just, massive efficiency when you're operating at scale.
Gotcha. Makes sense.
And what's fascinating here, like you said, isn't just that the market's growing. It seems to be accelerating.
Yeah.
That points to something pretty fundamental changing in how businesses operate globally.
Right. Becoming more essential.
Right.
So let's look at that global picture then. The numbers are pretty striking.
They really are.
So back in 2021, the report pegs the market at just over $3.8 billion.
$3.8 billion. Okay.
Then it predicts a climb to over $5.3 billion by 2025. And then look at this. By 2033, it's projected to hit over $10.2 billion.
Wow. So basically doubling again in that later period.
Yeah, almost doubling between 2025 and 2033.
Right.
The overall compound annual growth rate, the CAGR, is 8.5% across that whole forecast period.
That's a healthy clip.
It is. So what does this near doubling in, roughly a decade really signify? What's the bigger trend here?
Well, connecting this to the bigger picture, 8.5% CAGR globally is solid, but that doubling effect, it's not just like incremental improvement people are chasing.
Right.
It points to this huge global push for digital transformation and really optimizing operations. Businesses everywhere are prioritizing it.
So it's widespread.
Absolutely. Doubling the market size means it's not just early adopters anymore. It's broad adoption across lots of different industries. Companies are making serious strategic bets on automation. It's moving beyond just saving a bit of money.
Towards agility, maybe. Competitive edge.
Exactly. Agility, getting ahead of competitors.
Yeah.
It's becoming, table stakes for a modern business.
Yeah.
Almost non-negotiable.
That really lands the why behind the numbers. Okay, so the global view is strong, but you're probably listening thinking, okay, where is this growth hottest?
Yeah, the regional breakdown is always revealing.
This is where it gets really interesting, I think. Let's start with North America. Usually a big, mature tech market.
The traditional leader in many tech areas.
So the report has North America at nearly $860 million in 2021, projected to grow to almost $2.2 billion by 2033. That's a CAGR of 8.15%. Pretty solid.
Still strong growth for a mature market.
Definitely. Now, the U.S. obviously makes up the biggest chunk of that, volume-wise. It goes from about $608 million to nearly $1.5 billion with an 8% CAGR.
Right.
But here's a little detail I found interesting. Canada. It starts smaller, around $177 million in 2021, but it's projected to hit almost $497 million by 2033.
Okay.
And its CAGR is actually a bit higher, 8.8%. Mexico is a bit lower, around 7.7%. But why might Canada be growing just slightly faster than the U.S. here? Any thoughts?
Well, it's fascinating. Even within a mature region like North America, you see these little differences. The report kind of hints that while the U.S. has that huge existing base, Canada's slightly higher rate might be because certain sectors there, maybe finance, maybe government, are pushing particularly hard on modernization right now.
Playing catch-up or just aggressive investment?
Could be a bit of both.
Yeah.
They might be on a steeper part of their adoption curve for these really advanced automation tools compared to maybe some more saturated sectors in the U.S.
That's a neat insight. Okay, let's hop across the pond to Europe.
Okay.
Europe's market was valued over $770 million in 2021. It's projected to hit nearly $2 billion by 2033. And its CAGR is actually a little higher than North America's overall at 8.33%.
Okay, so Europe's slightly outpacing North America on average growth.
Seems like it. Now, within Europe, the UK and Germany are real powerhouses. The UK goes from about 155 million to 437 million, with a really strong TGR of 9.1%. Germany is also strong, 179 million to 485 million, with an 8.8% CAGR.
So those two are driving a lot of the European growth.
They really are. France and Italy have slightly lower CAGRs, around 7.9% and 7.8% respectively. Russia and Spain a bit lower still. But check this out. The report lumps together a rest of Europe, and that category shows an impressive 11.85% CAGR.
Wow, nearly 12%.
Yeah. What does that tell us when you see a collection of presumably smaller markets growing that fast?
That rest of Europe figure is really telling, isn't it? It often signals that smaller economies, or maybe specific industries within those countries, are making really aggressive moves in automation.
Like who, for example? Does it mention specifics?
It gives a few examples like Sweden, Denmark, Switzerland, Luxembourg, but their individual KGRs are more in the 6-8% range. So that high rest of Europe number suggests there are others, perhaps in Eastern or Northern Europe, that are really accelerating.
Maybe leapfrogging, like you mentioned before.
Exactly. Fewer old systems to rip out. Maybe they can adopt cloud-native automation faster, or perhaps some targeted government digital programs are kicking in. It definitely shows there's a big appetite for this stuff across the whole continent, not just in the biggest economies.
Really interesting dynamics there. Okay, let's shift focus to Asia Pacific. This region looks seriously robust.
Yeah, APAC often shows very strong growth in tech markets.
So it started at nearly $1.6 billion back in 2021, already a big market.
Bigger than Europe or North America individually in 2021.
Right. And it's projected to explode to over $4 billion by 2033. The overall CAGR is 8.37%, similar to Europe's average.
$4 billion, that's substantial.
It is. Now, China is the biggest piece, going from about 562 million to 1.5 billion, with an 8.7% CAGR. Solid. Japan's growth is a bit slower, around 7.5% CAGR.
Okay.
But the real standout here, according to the report, is India.
India often shows high growth.
It starts at around 219 million in 2021, but it's projected to hit over 635 million by 2033. That gives it the fastest CAGR in the region, 9.49%.
Almost 9.5%. Wow. What's driving that, according to the report? Why India specifically?
Well, the dynamism in APAC, especially India, is really something. The report suggests a few key things are happening there.
Like what?
One is India's massive IT services industry. They build and manage complex systems for companies worldwide, right? So they inherently need and use sophisticated automation tools themselves. So they're both users and potentially implementers.
Exactly. Plus, you've got rapid build-out of digital infrastructure across the country, a really vibrant startup scene, and government pushes like Digital India. All that creates perfect conditions for automation adoption to just take off.
They're building it in from the ground up almost.
Kind of. They can often skip older, less efficient ways of doing things and go straight to modern automation as the foundation for new digital services.
That makes a lot of sense. Okay, what about elsewhere in APAC? South Korea, Australia, Singapore?
Also showing solid growth. South Korea around 8.2% CAGR, Australia 8.1%, Singapore just under 8%. Southeast Asia as a block is strong too, nearly 8.9% CGR.
And similar to Europe, there's a rest of APAC category.
Let me guess, also growing fast.
You got it. The report says rest of APAC shows the highest pace with a KGR of 9.7%.
So that pattern repeats smaller or emerging markets within the region showing explosive growth rates.
Exactly. Fascinating. Okay, let's pivot to South America.
How's the picture there?
Steady, I'd say. The market was valued around $195 million in 2021, expected to grow to over $480 million by 2033. That's a CAGR of 7.82%.
Okay, solid growth, if not quite as explosive as parts of APAC or the rest of Europe.
Right. Brazil leads in volume, going from about 86 million to 219 million with an 8% CAGR.
Yeah.
Argentina is actually slightly faster, 8.2% CAGR. Colombia also just over 8%.
It's a pretty consistent growth across the major economies there.
Yeah, Peru and Chile are a bit lower, around 7.4, 7.6%. The rest of South America is actually the slowest here, about 6.5% CAGR. What's driving this steady growth down there?
South America's consistent growth kind of reflects that broader regional push to modernize. You see it in finance, retail, manufacturing especially. They're investing steadily in efficiency.
So less about leapfrogging, more about continuous improvement.
Perhaps, The report does mention a specific focus on cloud-based automation solutions there, which makes sense. Cloud lowers the barrier to entry, makes it easier for businesses across the continent to start transforming digitally.
Good point. Okay, 2 regions left. First, the Middle East. This one looked really strong.
Ah, yes. The Middle East often posts high-growth figures in tech adoption lately.
Definitely here. The market was over $226 million in 2021, forecasted to reach almost $645 million by 2033, and the CAGR, an impressive 9.24%.
Over 9%. That's very strong.
It is, and some countries are doing even better. The UAE, 9.7% CAGR, Qatar, 9.4% CAGR. Saudi Arabia, the biggest market there, is at 9.1%. Turkey is also strong at 8.9%.
So widespread high growth across the key nations.
Absolutely. And guess what? The rest of Middle East category.
Don't tell me highest KGR again.
Bingo. An incredible 11.5% CAGR.
Wow. Okay, so what's the story in the Middle East? Why such rapid acceleration? This region's growth really speaks volumes about the huge strategic investments they're making in tech. Many countries there are actively trying to diversify their economies, move beyond oil, right?
Yeah, we hear a lot about that.
And technology, including automation, is absolutely central to those plans. Think about the huge infrastructure projects, the smart city initiatives, plus a growing private sector that's really embracing digital transformation.
So automation is seen as key to that economic shift.
Totally. There's a clear understanding that efficiency driven by automation is crucial for competitiveness and building these new economies.
Incredible. Okay, that brings us to our final region, Africa.
And how does Africa look?
Honestly, this might be the most impressive growth story overall in terms of velocity.
Really?
Yeah. The market started smaller, around $215 million in 2021, but it's projected to hit almost $850 million by 2033.
Okay, so quadrupling, roughly.
Exactly. And the CAGR reflects that, an astounding 10.42% continent-wide.
Wow. Over 10% average growth across Africa. That's genuinely exciting.
Isn't it? South Africa leads in size, going from about 99 million to 367 million, with a 10.1% CAGR. Nigeria is close behind in size and slightly faster growth, 10.3% CAGR.
Very strong numbers for the two largest economies.
And you guessed it. The rest of Africa shows a remarkable KKR of 11.5%.
Okay, Africa takes the prize for overall regional growth rate and the rest of category growth rate. That's significant. What's driving that? Is it leapfrogging again? Specific sectors? Indeed. Africa's performance, especially those incredibly high KGRs, it's just a huge signal of untapped potential being realized. The report suggests it's not just about catching up, it is about leapfrogging.
How so?
You've got a young, increasingly tech-savvy population, internet access is growing rapidly, and there's just a massive need for efficient, scalable ways to deliver services.
Like banking, telecoms.
Exactly. Telecoms, banking, government services, they're adopting automation rapidly to handle complex stuff and reach huge populations. And often, they can go straight to the modern cloud-based solutions without the baggage of older systems.
That is a remarkable story of growth and innovation. Okay. Wow, we've covered a lot of ground, a lot of numbers.
We have, from billions globally to specific regional dynamics.
Let's try and synthesize this. What are the main takeaways? If someone's listening, why should this market, this growth, matter to them?
Right. This raises that important question. What does this all mean? I think the big picture is this shift in dynamics.
Okay.
Yes, North America and Europe are still huge markets in terms of dollar value, providing a stable base. But the acceleration that's happening fastest in Asia-Pacific, the Middle East, and especially Africa, that's the major trend to watch.
So the growth engine is shifting geographically.
It seems so. Countries like India, the UAE, Nigeria, South Africa, they're posting these exceptional growth rates. It really changes the map of where the market expansion is happening. So the outlook to 2033 is kind of stability in the established markets, but just immense expansion, immense opportunity in these emerging ones.
And for the listener, why care about workload automation software?
Because its growth reflects something universal. It signals this unstoppable global drive for more efficiency, for saving costs, yes, but also for gaining that strategic edge. Cuts across almost every industry.
So it's a sign of how business itself is changing.
Precisely. The trajectory tells you that companies everywhere are actively investing in automating their core processes. They see it as absolutely essential to compete, to be resilient, especially with how fast the world is changing. It's not a niche IT thing anymore.
What a fantastic deep dive. We've seen this clear global growth, established players holding steady, but just incredible momentum in APAC, the Middle East, and Africa. Automation really isn't optional anymore, is it?
Seems not. It's becoming foundational.
Well, thank you for joining us for this exploration of the workload automation software market. Really appreciate you walking us through that.
My pleasure. What's fascinating here, just as a final thought, is really ponder how this rapid spread of automation might reshape things more broadly.
Like what?
Like workforces,
Sure.
business models, even national economies, especially in those regions growing fastest, Africa, parts of Asia, the Middle East. How does this tech change the kinds of jobs available? What new kinds of companies emerge? Could it even shift the sort of geopolitical balance as operational efficiency becomes a real national advantage? Lots to think about.
Definitely powerful questions to leave us with. We hope this deep dive gave you a clearer picture of this really dynamic and important market. Stay curious, keep learning, and we'll catch you on the next one.